Hey guys, welcome back to our channel. So this is the part 2 of the video that I posted previously on our channel. And in this video, Dent explains why he is avoiding Bitcoin and gold right now and reveals the one crypto he is tracking. He says that in an otherwise weak economy, bubbles bid faster than normal bull markets, but crashes always come twice as fast as the bull side. Bear markets come faster, fear runs faster than greed, and we have got unprecedented greed. Every dumb ass in the world is in stocks right now. By now, we are buying something overvalued or crypto or something. Harry adds up that crypto's got a lot of future, just way overvalued. Amazon was 136. The next thing you know, it was 6. That's how overvalued it can be, even if you have long term potential. Bitcoin is the digital gold. It's just not yet gold. The value of all the gold in the world is about 10 trillion. The value of all the bitcoins now about a trillion. Bitcoin ultimately projects maybe 5 or 10 years from now to be as high as $1,000,000. All the crypto guys are making a lot of money and they are smart enough to save taxes. The best tax advantage sanctioned by the IRS. You don't have to hide from them. You just got to follow the rules. New technologies are first emerging because they are the thing of the future, but they get overvalued as if that future is now instead of 15 to 20 years from now. Then they have the big crash. Bitcoin becomes the gold for the world, for a digital system, and Bitcoin goes up to where it would be up maybe about $20 trillion when it hits its upward potential, says Harry. But it's a standard. It's not going up because it's going to produce income, even though you can borrow against this stuff. That is, Bitcoin is the new standard if it succeeds, and that's powerful. Also, Ethereum is an example, or Coinbase, but Ethereum is a better example. Ethereum is basically a platform for constantly spawning off new blockchain apps or coins. So both of these are going to crash because they are overvalued, but both of these are the future as per Harry. If we have this crash by late 2022 or 23, the first thing you should buy because nothing would outperform it. It was just like buying Amazon in 2001 or 2. New industry has a lot of entrants in the early growth stage and they keep getting shaken down. We are going to have a big shakedown in the crypto thing as well. The surviving companies, that is going to be Bitcoin, Ethereum, probably Coinbase. It's not the right time to buy cryptos. This is like buying Amazon at the peak of its baby bubble, before the big crash comes and then the daddy bubble to follow. There's a daddy bubble coming in crypto. A new S-curve emerging slowly in the niche markets. It's going to explode mainstream a couple years from now. It's going to just be as big as anybody in that space is talking about and maybe even bigger than that. They are just going to get a big shake out for it. It's the wrong time to get into this. What happens when you see these stories break out? Speculative stories like Doji. It was the crypto of the moment last week. We saw what happened after SNL and Elon Musk. That is another sign of a bubble. The fact that something like that could get bit up that much because Elon Musk is going on Saturday Night Live and then drop 30% when he cut a bad joke about it or said the wrong thing. That's obviously a bubble. This whole blockchain is so early stage. It should not be for most investors. Let it shake out first and prove a more projectable pattern. It's too early for most investors to touch anything like this. It's so volatile and you can lose. According to Harry, if crypto and blockchain is still up at the end of this year, you should sell it immediately at whatever price it's at. Because it's been a very clear 4-year cycle on its having things halves and then 18 months later peak. Bitcoin has taken some of the bite of a gold. Gold should have done better coming into the late space boom, and gold in the 2008 crash actually went up for the first several months before it actually crashed. So it has taken some of the wind out of its sails. But bottom line, Bitcoin clearly correlates more with stocks in the stock bubble. If you look at the whole movement, gold often most of the time goes against stocks. Bitcoin goes with stocks in this late stage. It's taking some of the fight out of gold. So if we do see the economy stocks actually start to crash, in that crash gold would hold up. Not as good as 2008 because it already showed it could fail. But gold would hold up early into that better. Bitcoin would go down faster of the two. So gold is still a better safe haven, but only for the earliest stages as per Harry. Ultimately gold goes down too. Gold is a real commodity. Two countries who dominates gold buying, China and India. Now China's seen its best days but still has a lot of urbanization growth. India is going to be the next China in the next boom. The treasury bonds do the best when the crisis gets deep. Most of the gains in the treasury bonds in the 2008 crash came in the second half of 2008 and not the first half. So the treasury bonds will really pay off as the crisis gets even worse. Treasury bonds are your ultimate safe haven. Now silver is the one of the things that is doing well at this point where stocks are maybe stalling and other things are getting questionable and commodities have done well recently. All this stimulus does this. Every day people are buying stuff, so it helps commodities. But commodities crash first. People don't remember that commodities went down the hardest, the most. Oil went from 147 to 26 in just a couple of months. So silver has already gone down and it's been lower than this. It's bouncing. It may bounce a bit more in the early stages like gold and it's going to go down lower. Gold hold up the best because it still has that safe haven perception, even though it's not really quite true. Copper, lumber, palladium are the biggest boomers in the CRB, the commodity index. As soon as housing shows weakness, then they are going to go down. They are going to go down so fast you won't even believe it. In the 2007 crash, certain things happened first. So it's not the same order this time. Real estate peaked first in that downturn. Real estate peaked in early 2006. Stocks peaked in late 2007 and then everything collapsed kind of together at some point. So Harry concludes that this time stocks are peaking first and real estate will follow a bit. So you are really looking for the danger in copper. If stocks start to crash, that's your signal. You better start selling that real estate then. The longer a market, a commodity, a stock, a bond goes up, the more risk they see every day. This whole crypto and blockchain is the epitome of this entire greatest and most global bubble of all time. That's not even stocks because they are coins except for Coinbase. And Coinbase is already running for money. It went public, got overvalued. So that's the epitome of this bubble. You are buying into this. This is where the biggest crash is going to be and it's going to be sooner, not later, warns Harry. So guys, this is the end of the 2 video series from Harry Dent. Now I would appreciate if you would let me know your thoughts in the comment section below. Also convert that like button into blue and subscribe to this beautiful channel for more such amazing videos. Thank you.